So the big question today, is Bitcoin in a free fall or is this just a flash crash? Hopefully today we'll give you guys a rundown and give you some insights as to how to play this market. We're going to get in deep. My name is Paul Barron. Welcome back into Tech Path. Before we get started, I want to thank our sponsor, iTrust Capital. If you guys are looking at going long-term into your crypto assets and you want to do it within an IRA, this is the place to do it. Check it out. You can go over to itrustcapital.com. You will join a ton of people and a large amount within the market itself, 7.6 billion in transactions and 200K in total accounts out there. So check it out there. A lot of people are using this for your position around IRAs. And just remember, obviously everybody's different. Always check, confirm this with your own CPA or tax advisor as you get ready to go in next year. We'll take a look at that. Use our link down below. You'll get a $100 funding reward. Does help the channel out, and it's awesome. So we'll go from there. Let's get into a couple of topics today. I want to go to the Kobeisi letter. There's some key events here that are happening this week. Some of this could have been on the front side of what we saw happen on Sunday and Monday. But key events right now, November CPI inflation coming out on Tuesday. We'll see that. And I'm curious as to whether or not you guys feel we'll continue to see a decline in CPI. If we do, that will be an interesting comparison as to what the rest of the year might look like, and especially into Q1. OPEC monthly coming out. This is just coming out on Wednesday. Even though we're seeing still continued reduction in overall oil prices. November PPI coming out. Fed rate decision on statement on Wednesday. We'll get a chance to see that. Retail sales data, I think, is the one that is going to be intriguing to watch because it will give us a much better feel of how the American consumer is doing, which obviously will apply to whether or not we will see jobless scenarios playing out longer and giving the Fed an opportunity to correct things in Q1 next year. So a couple of things, volatility set to return with a huge week ahead. I would agree for you guys. Now the question is where are you guys playing this market right now? You look at Treasury yields, they're inching a little bit higher ahead of the Fed meeting, which will happen this week. Bitcoin price still holding around the 42K mark. A couple of things within this that I want to focus in on. This is both the simultaneous rise in treasuries and the drop in Bitcoin's price prompts, kind of this relationship between traditional and the crypto markets. And I'm kind of curious, do you guys feel that that is still a scenario? Do you think that Bitcoin is still related to the traditional markets as a whole? I know a lot of Bitcoiners out there that believe this is completely detached away from the markets, but I don't know. I'm still watching traditional market flex and Bitcoin kind of aligning with that. And with that kind of scenario, you also see Ethereum kind of right along in a lot of the similar fashion in terms of rises and falls, even if you look at the chart. Traders on edge, eagerly watching the Fed for a meeting for clues about prospective interest rate changes. I don't anticipate anything right now. I think the real question is whether or not on the outlook for Chair Powell is what that early part of next year might look like. And if there's new data, which I don't think all of it is in for year end, for the chairman to really kind of take a look and say, all right, we believe we've pushed hard enough, long enough to see an adjustment here. So investors are looking at hints on authorities whether they would cut rates early or possibly even go into mid to latter part of next year. And there's differing opinions on this right now for sure. Some people like it, say that we're going to see something by March. Some are really going hard on this, saying that it won't happen until late summer. The crypto market opens this week with a pullback. Analysts say, don't worry about this. Love to get you guys' opinion on this. Bitcoin found and lost around 6.5% over the 24. This, of course, was just this morning, posting an 8% decline from its high last week. So that was a big deal. And it looks like the leverage adjustment, which can be a painful, but is usually good news. When we do see adjustments like this, it usually with these over-levered traders that get into this. Bitcoin also remains a primary focus of investors. This is a bigger picture, I think. Remember, we still have an ETF that's right in front of us. And whether we get the approval or a denial, either way, there's going to be some volatility to play this market out. Because remember, maybe if the ETF is truly the trigger, the question is whether or not we do get the bigger pullback that a lot of people are still talking about. And, I talk to a lot of financial advisors and people we've had here on the show, and they still believe that that is in the cards. We got to get some of our guys back on this week and early next to talk about that. Monday's pullback, aside for Bitcoin and ETH, are still slated to close out year far into the green. So, some people would look at this and say, hey, this is a typical up and down cycle with what we've seen, from Bitcoin in the past. Many people think that the U.S. Fed, as well as the ECB and the BOE, will keep the door open to further tightening. That's a real question mark, because if we do continue to see the central banks continue to put pressure, even in the EU, and when you think about that, the macro pressure into a cycle that could be lessening here in the United States, that's the real question overall. So opinion is a little bit of a dovish tilt coupled with softening U.S. inflation, which I agree is going to most likely happen, and retail spending jumping down, which I think it will also. This, I think, will be enough to put enough pressure on Powell to maybe look at an early year adjustment. All right, so here's Mike Alfred kind of breaking in on a little bit more about the textbook washout. Open interest wiped, RSI reset. Beginners, high time frame traders scared, kind of flat-footed. Just a touch of fear, exactly what you'd expect to see. He's looking for this being a perfect lineup to a $48,000 Bitcoin. How do you guys think this is playing out? Is this textbook, or is this something that could be inducing a bigger look into the future? Because if you look at inflation, and if it does come in soft, then you look at retail sales coming in soft. And that has so much of a pressure on retail sales. If it comes in soft, it's going to have pressure on the jobless outlook, or the job outlook for American consumers. And I think that's the question mark that has to be answered for Chair Powell, because he is looking at jobs. Number one, he wants everybody to lose their job. And if there's enough people that lose their job, we've tightened enough. That's really what it boils down to. And if that has been the case by January, which is when we'll know those numbers, then is that an opportunity to see a Q1 or an early Q2 basically rate reduction? And if we do, then obviously you guys know what that means. That means we're going to see some crazy runs on the market. Will Clemente coming in, Bitcoin just doubled in 2 months, no pullbacks. Correction is not that surprising. Correction shakeout weekends. Typical. We see this in traditional markets as well, but more so in crypto. That is for sure. There are some things happening, though, right now that could lean in a little bit more on the positive side. I think when you look at the overall picture, one, of course, is this right here. Google updated their ad policy for crypto trusts ahead of anticipated ETF approvals. This is pretty much just saying, hey, BlackRock, all you Bitcoin ETF trusts and ETFs, come to us. We're open for business, and you can just, unload your marketing budgets right here at Google, which is a good thing, because maybe they also are understanding the kind of thing that Eric Balchunas is saying, and that is we are getting close to the ETF. Said another way, we're inside of the last 1%, seemingly endless and exhausting journey saga, which is a big reason why some of us have gone a little crazy right now. And I think that's mostly coming from, and if you don't know, Balchunas there, of course, the Bloomberg analyst, that he and Jeff Safer really focusing on ETFs across the markets. That being said, Coinbase is doing something as well that is very interesting and is queuing up in a very interesting time. And what I mean by that, if you think about, the last, say, 4 to 5 weeks, you've probably followed our channel around some of these emerging projects in general. And if you go back to the Solana ecosystem, whether it was Pyth or Allbridge or many of those, a lot of activity in those early stage tokens and projects. Well, Coinbase is now doing a program that really is bringing in these kind of projects. So it's called SEAM, so listing on launch day. So this is going to be part of Coinbase's called Day One token listings. And the way it works simply is just, if you list with Coinbase first as a project and you do airdrops, then you'll get automatically listed on Coinbase. Now, many of the projects, that's what happened with Jito. I think many of you guys are probably following that. But the point is that if you look at Coinbase's reach, number of traders, active wallets, all the good things that happen within the ecosystem, and also people will say, hey, can I get it on Coinbase? That's usually the problem with a lot of these early stage projects. If Coinbase Day One works, then we could see an huge landslide of new projects coming to Coinbase that in the past, maybe you couldn't get unless you were in a decentralized exchange. So the rule is, though, you have to launch with Coinbase first, not on a decentralized exchange. So they'd have to go out to that later. So I don't know. That would be an interesting, I think, an interesting thing that will play out, and it will potentially open up a lot of opportunity for you and I to maybe look at some projects that we never really got a chance to see in the past. So good, kudos to them. All right, Cathie Wood. Let's get to a couple of points here on Cathie. So remember, she offloaded a record number of Coinbase stock. And I'll show you the chart here, but I wanted to highlight a couple of points here. All right. Friday last week, firm executed another sale, offloading another 335,000, almost 336,000 coin shares, valued at approximately 49 million. Not a lot, but 59 million in coins sold earlier in the week. Now you've got something that's pretty close to over 100 million. And the strategic adjustments that they've put into place, this move raised substantial capital, reflecting a strategic shift in the firm's investment approach. Also remember, this is a time when even ARK has got to be able to prepare for some opportunities, mainly because of the tax positions as well. Coming toward year end, there are some opportunities there that also play out to this in the strategic alignment of a portfolio. Coinbase's stock reaching heights, which many people say, hey, maybe it's a little overheated because it has been rising fast. So that's another thing where you just simply take profits off the table. So many people might be seeing this as a much bigger situation. But through experiencing significant uptick, standing around 300% higher year to date, that I think will be the factor going forward, is whether or not Coinbase can hold that position. And if you look at her position right here, and you can kind of see the Coinbase stock. This is Coinbase stock right here. And her position has started to slowly drop as Coinbase, even though she was selling as it was declining right here. But even during the rise, starting to take profits. But this big move here recently has been a pretty significant one that will be interesting to watch. Let's go to a clip of Cathie, because I think there are some things she kind of opens up to here. Listen in.
When everyone was worried about their deposits in the banking system, in March, they were worried because of counterparty risk. Banks are opaque, whereas the Bitcoin blockchain is transparent and it's decentralized, where banks tend to be centralized. So a huge proof of concept. So this realization, wait a minute, Bitcoin is a risk on asset and a risk off asset? That's crazy. We don't have too many of those. As we get ready for, hopefully, the SEC's approval of a spot Bitcoin ETF. We think it is going to happen.
All right, so there you had it. I mean, clearly this is a situation where ARK and Wood is getting ready for an ETF. A lot of this will go into applicable strategies that will start to play out in Q1, I think, for ARK. So this is one we're watching very closely, because I think it has a lot of impetus on where the market could potentially go. And also there's a lot of carryover effect into altcoins and many other areas within crypto in general, DeFi, that will play into this as well. TED Talk Macro hits on a couple of things, and that is China's not letting up. Liquidity injections via the MLF are now currently the highest they've been this year. So you can kind of see that big green candle. Let me kind of pop that out to a big screen there for you guys. Zoom in on that. But you can kind of see liquidity continues to move in, I think, in general, and the action that we're seeing on Coinbase, just to give you an example of where this is happening around, especially around the Chinese market in general. Because remember, GDP, the issue with what we've seen with real estate in China, along with just the overall capacity of where China is going from a global position, which is, I think, a bigger factor that plays into this. So this may be a little bit of a bigger thing to watch as we get further into it. Goldman is still saying, hey, we think a Fed rate cut is still coming. Catalyst for Bitcoin halving is kind of their point. Leading bank adjusted its forecast, predicting the U.S. Fed may cut rates twice in the next 2 years. And the adjustment could align with Bitcoin. So remember, that happens in May. And that is a big deal. So if we get that in April and you've got a halving occurring, that's what kind of supercharges these potential runs. And then Goldman initially foresaw the first Fed rate cut coming around December 2024. And now, according to Reuters, the timeline has now been expedited to Q3 of 2024. So remember, all these scenarios are playing out without any full reserve data that will help the Fed make their decision. So already they've moved up as much as 6 months. What would that look like if we actually do see some trailing data come in to cause the Fed to maybe get a little bit more aggressive? Sachs noted also that healthy growth labor market data may suggest immediate rate cuts. I still don't think there was healthy growth. This is something that I think is still a misnomer because of, and you'll probably hear Chair Powell talk about that this week, is that there were numbers in the job markets in this last report, though it was up in terms of we weren't continuing to see the slide in job loss. I think it was coming from a lot of unanticipated situations that were playing out. This could be the UAW, among many other companies that are affected by the UAW. Remember, there's a whole ecosystem that goes around automobile manufacturing. So I think that may actually have a bigger effect on the next cycle of data that comes in on jobs. In other words, if we continue to see a downward growth on jobs, remember, hospitality sector starting to see some problems right now in terms of growth. That in itself, because of credit, also because of consumer spending. If the retail sales come in soft, it's like a trickle effect, guys. It does affect these jobs for sure. Further into this, if you want to think about FUD, then you have to, of course, put the poster child out there, and that is U.S. Senator Elizabeth Warren. She's now introduced a bill to now crack down on crypto even further. And within this, this is the one that I'm concerned with. If you think about it, she is aligning herself with quite a few more sponsors, 5 new co-sponsors out there right now. This is trying to expand the Bank Secrecy Act, which is one of the biggest shams I think we have right now. This is going to be a little bit of a struggle for next year, I think, for Capitol Hill and DC, being able to fend off what's happening in this space. Now, granted, you've got a lot of new candidates coming into, the cycle. And of course, we have a presidential election kicking off. So there's going to be a lot more, I think, openness during next year at a time when we may get a possible rate cut, new data, and maybe some global softening overall in some of these scenarios where we've seen inflation just getting out of hand. If all of that comes in at the right time, say Q1 mid-year, we have something that could be a absolute face melter going forward. We're going to have, by the way, speaking of that, we're going to have Mark Yusu on the show tomorrow, I think. So make sure and stick around for that. We'll try to get to a couple other interviews this week. We'll have a handful of others that you guys don't want to miss. If you're not subscribed to the channel, make sure and get subscribed right now. It's a great place to get additional content. And of course, if you're not in our Diamond Circle, make sure and get in on that. That's our email newsletter, but it's also our Substack. So if you go to PBN3, the number 3, .substack, you'll be able to jump in there. We do a lot of additional alpha, some podcasts over there, stuff we don't put here on the YouTube channel. It's a great place to get additional content. If you guys want to catch me on X, it's @Paul Barron. Catch you next time right here on TechBath.